How do, folks? All right, so we're looking at the euro dollar. I gave you guys a trade example yesterday, managing it through TradingView's paper trading application right down here. All right, so for some of you that are new, the question is going to be, well, if you're teaching, why are you teaching with paper trades? Well, because in the United States, I'm not licensed to give trade advice. So that's what we're doing here. We're giving out paper trade hypothetical examples and proving that I can see price before it moves. All right. One of the things I want you to consider before we get into this video, and I'll try to keep it very, very short. I promise it will be a brief one. But I have a lot of people that try to send comments to me, and my comments are filtered because there's a lot of crap that comes by my way. So I try to keep that to a minimum. But the number one complaint is I talk too much. So I'm going to try to give you very concise videos where you're going to see the difference between not talking about the real reasons of what's going on and how you work towards developing as a consistent trader, which is what you get in my tutorial videos on this YouTube channel, versus me just saying, okay, here's me doing it, and here's me saying this is what happened, and that's it. And you're going to see that there's a distinct difference between that and really learning under someone that has experience like myself. So, all right, anyway, have you heard this before? You see this a lot on YouTube. I'm going to show you this trade that I took, but I'm going to use the replay button because just work with me. This doesn't feel right, does it? And this is the trade I took, and they don't have anything like this on the chart. They don't show any kind of trade history, none. Okay, they have no proof that they can manage a trade or an idea. That's what's going on right now on YouTube, and it's rampant. They all talk about fair value gaps, breakers, bullish order blocks, bearish order blocks, mitigation blocks, and they're all mislabeled. SIBI, BISI. These are all my terms. These are all things that I understand how to use clearly, and I'm giving you examples of it here. And I'm going to try to give you an example once a week. That way you guys can see, number one, it's not a facade. It's not a rented MT4 server. Okay, I'm only teaching, even with my mentorship, through TradingView, and I don't use the replay button up here. You guys can watch the video I did yesterday managing this entire position here. Okay, I had a guy send me an email saying I'm adding arrows to the chart, and I said, okay, well, I'll just do another trade, and you can see it. I'll manage it the entire day, and that's what I did yesterday. So everything all the way down to the actual getting stopped out here on the final balance. And I want to kind of like go over in short fashion why it's important to have someone that can do it and prove they can do it, not just once in a while, but consistently. And this is the kind of stuff I do every single week. And for the large part, it's been unseen by YouTube. I mean, I've done some examples last year. It took a small account, ran up really big, and that's fine and all, but I want you to appreciate seeing what it's like following the progress of what would be reasonable in terms of expectations. Now, I'm not saying that you should be starting as a trader trading with $750,000 in leverage with a short. Okay, I'm not saying that you should be doing that, but what I'm showing you is how you as a developing trader should learn to take profits and pay yourself along the way. I can take that trade here and hold for the entire run down here and get out. I can do that. But when I show examples, I want you to learn from the visual approach to me doing it. So that way you can see it's beneficial to do so. You as a developing trader aren't going to know if this is a good entry point to hold to get out below here. That's unreasonable. So while you grow in your understanding, you want to take partial profits along the way, and then when it does get to your objective, then it feels much better because you've managed the risk, you've managed the uncertainty, and the psychological warfare that's going on the entire time you're in the trade. So I just tossed that in there as the only jawboning you're going to get. All right, so what actually took place yesterday? Let's put the annotations on the chart. What was going on in my mind was we had a market run up initially up to the big figure 118. So 118, it traded through it once, twice, three times, and then broke down clearing this short-term low here. When it broke down below that, it started consolidating sideways. And when we entered the London close, after running the big figure, which is something I teach actually on this YouTube channel. So if you go and search through my videos, trading the big figure or trading figures or something like that, I can't remember exactly what the title is, but the video goes over with some of the details that you can ferret out of the price action here. But this high to this low, you get an optimal trade entry in here, and it trades up into it again here. And then all I did was use a small little optimal trade entry right there during London close. What is London close? 10 o'clock in the morning to noon, New York time. It's not always the opposite end of the range. And when you know what you're doing and you understand the algorithm and real institutional trading, it's a big buzzword right now on YouTube, isn't it? Institutional trading. Like, okay, show me institutional trading. Show me that you can read price before it happens. Sadly, you don't see that happening. But if you got somebody you know that's doing it and proves it every single day or every single week, send me their link. I'd love to be able to watch them, because right now it's just me. So the optimal trade entry right in here trades up into a bearish order block. You guys can watch that video yesterday and see actually an execution right there as it happens. And the first draw on liquidity, which is DOL here, that's this little abbreviation, and it's an expired little magnet I put on there to draw your attention to if you're watching the chart or looking at the chart, just like this one was down here. First profit was taken there, and partial was taken here as we entered into an order block, another order block down here ahead of this low, because it could very easily retrace and come back up here and wipe out these equal highs. See, as a developing trader, you're not going to know if that's likely to happen or not. I have things that I can see, but I like to teach and preach at the same time. So if you can't follow the logic of why you take partial profits along the way, if you're the type of person that says, well, it's one and done, I'm going to get in and get out with my full profit or nothing, or take a loss. Well, you're not going to be around in this business very long, especially if you're a developing student, because the market's going to eat you alive. But once it gets below the low over here, okay, as it was approaching, rather, let me say it that way, I offered the opportunity for the market to limit me out below the 117 big figure, and you can see that in the recording. It wasn't having any of that. It went down below the low. It allowed me to get out below the low, this low over here. But then I put a stop loss, tightened it up, because I didn't want to have any kind of retracement up on the position after taking that low out, because that could happen. And I don't want to give up a good profit, hypothetical nonetheless. But all these points in here referenced in here. You can see all the business here. So this is what I'm referring to. When you see these guys online, it's all the multi-level marketing guys and the IML guys that claim they know how to do institutional trading, but you don't see them doing anything. They have a lot to say about the left side of the chart. Show me the right side of the chart. But anyway, looking at the New York session, I'm getting a lot of thumbs down on this video because of that comment. It's okay. It's okay. It still helps the algorithm pump up my views. So we have the New York session today. This is what happened today. I posted on the community tab on my YouTube channel. Focus on the 15-minute time frame. On a 15-minute time frame, we'll look at in a moment, because it's the 118.07 level. Okay, we'll look at that in a minute. But on the 5-minute chart, we can see what I taught you, all free, no charge whatsoever, the optimal trade entry trading model, using the 8:30 in the morning to 11 o'clock in the morning time frame. And we have one optimal trade entry there, bullish order block. We have one optimal trade entry there, bullish order block inside of the time window, and trading up above the 118 big figure and above that red line. What is that red line? Well, I counseled you all to go to the 15-minute time frame, and had you done that, you would have seen these relative equal highs. So above that is where the market is likely to draw to, and it popped right above that, just like I taught you on this YouTube channel. Didn't cost you anything but the time to study it, and it delivers every single day. There is not one single quote-unquote mentor out there that you're going to have to pay for that'll give you something better than that consistent pattern. It delivers every single day. And truth be told, when I started on Baby Pips in 2010, that was the actual model I was doing when I was recapping the majority of all the trades I was showing you at that time. So it's got longevity, and it was working for me in the 90s as well. That's in the 1990s, folks. You millennials that aren't used to seeing things before 2000. But that's the business on the Eurodollar and what took place. And if you like these kind of videos, if you like to see things like this more frequently, I'd be happy to do it. Just give me some support with a thumbs up and share the video. Until I talk to you next time, wish you good luck and good trading.